Hello and welcome to another episode of the Wealth Hub podcast. I'm your host Sharon Tomushabe, and today we'll be talking about insurance and investment, all combined into two. We're going to see what insurance helps us with and what investment actually means. I think back here at home, when it comes to the Uganda setup, most of us have been misinterpreting insurance and maybe having perceptions that are very wrong. And today our guest speaker who is going to be taking us through why you need insurance, investment, and how the two bridge together, and why you need both and not just one, and how important it is to actually seek advice from a professional advisor. We'll be having Dorah Babirye from ICEA Lion, and she's here in the studios today. And Dorah, thank you for making it all the way to the studio. It's not very close to where you stay. I would like to thank you and kindly introduce yourself to our listeners.
All right. Thank you, Sharon. It's a pleasure to be here, and you're doing a great job to actually just put this information out. So my name is Dorah Babirye. Pele Petwa. I love that name. I am a chartered marketer, and I work with ICEA Lion Group. ICEA Lion Group is both in Kenya and in Uganda. And just like our topic is today, we both deal in investments and as well as insurance.
So Dorah, I would like you to actually help our listeners differentiate between insurance and investment. Because when you look at people back home here, they tend not to appreciate insurance because they feel like insurance is an investment. So they mix up the two, or they feel that when they invest in insurance, they should get that money back.
Yeah.
So the good thing we have you in studios today. What's the big difference between insurance and investment?
Okay. Clearly, as you see me as well, you've been asking, and I've been trying to figure out what's the actual difference. So in very simple terms, I would say insurance is exactly what you would do to cover the risk or to protect your investments, while investments is actually what you're actually doing, and it gives you income. There's an income flow from it. Whether it's a business, whether the assets, they should be able to generate income for you in the long run or even in the short term, depending on the period that you've done. However, the major difference would be that insurance should always be looked at as the protection cover for our investments.
So we see protection covering risk. It's more or less you're making sure that you're protecting what you have.
Yes.
In case of loss.
In case of loss.
And you're
Very
saying
important.
investment gives you income, meaning you put it in something that grows.
Yes.
And instead of you just keeping it there and it's not growing, the investments help you get cash flow or income that comes in from the investments you've made. And for you, you feel that's the biggest distinction.
Yes.
Let's go back to insurance. What are some of those terms that are insurance that are not necessarily in the investment side?
Okay. And so it's very important for our listeners or our viewers to actually understand insurance is broken into two. Just like I introduced where I come from, ICEA Lion Group. Actually, it's one of the groups that actually have the two arms. So we have general insurance. That is the one that covers short-term risk. 1 year. Usually the contracts are 1 year.
12 months.
Yes. What that means is they cover things like fire outbreaks, comprehensive, well, our cars see that's general insurance, domestic packages. You would want to insure your home, your mobile gadgets in Uganda. I'm sure everybody has lost a phone somewhere in the jam. It's been snatched.
Also, I can insure my phone and
under the
ICEA
domestic
gets
package
to actually replace it with a new phone.
Yes.
Oh, that's interesting.
So why they do this under the domestic package, we may not be able to insure the phone as a phone or a laptop as a laptop, but we can be able to,
collective assets.
list them under the domestic package of your house.
Okay.
Yeah, so you choose the valuables in your house, what you want to insure, and then put the amounts and then you're given a quotation of what the premiums
So
would
I
look
think
like.
this studio needs to be insured. So before you go, I think I would love to see what the quotation looks like
Yeah.
to be able to insure these microphones and
Yes.
cameras. The lighting system, it doesn't come cheap. So
Yes.
if someone woke up and just took these things away, it's like the end of you.
Yes.
Getting others back, it could be quite pricey.
Capital is gone.
Yes, so I think it's important now that you bring it up that we actually consider it. Now, on the side of investment, how does it work?
So just to take you back on insurance, the other side would be the life assurance side.
Okay.
So life assurance, just like you hear it, it's lifetime. We cover things like retirement packages, annuities. I'm sure somewhere we'll be able to help the viewers understand how to be able to use these particular insurance products to then safeguard the investments they have done. So annuities, someone is retired, close to retirement, and then you want to have a continued income for a lifetime. But so you actually buy out an annuity depending on how much you want to earn. We factor in inflation. You know, we can do a projection of if right now inflation is maybe at, let's say, 3, maybe 5 years from now, could we be at 6? We factor in and then give you a quotation based on that, that even when the time comes that you're getting this monthly income, at least you still have your finances cushioned against the inflation. So that's really the life side, and that's insurance.
So we have general, just a recap. We have general for property, for household items, for cars, for homes,
Workman compensation.
workman compensation. Then we have life, which is now against our lives.
Yes.
In case you get an accident, you die, anything happens to you as an individual, that
Your
becomes
dependents.
life.
Yes.
Does that also take care of health insurance? Does life take care of health? Or health is now another arm of insurance as well?
So health, usually on the market, it sits under general insurance.
Okay.
Because usually it's also medical is 1 year. You've seen companies, they roll over and it's 1 year renewable. They sit down and see the dynamics. Have prices changed for medicine? Do we need to review? So it's usually 1 year. It can't sit under life. It's risky to put it under life because it's a short-term insurance, package.
Interesting. That's very, very interesting. So at least now we look at the investment arm.
The investment.
How does these two things integrate? Why does one need a bit of each?
Okay, that's a very, very brilliant question that we need to actually dive into. You cannot run your investments. To use an illustration, the Bagandas have a saying, "Okoza no yanika mutaka," which goes to be translated. I hope I don't do direct translation.
Do a direct one. It's okay because this is Uganda, so people need to try and understand.
If you do so well and save up and start to invest, because I like to use save and invest because they are in a sequencing. It's a process. I may not have what to invest, but I might be able to accumulate and save up and then start to say I've moved towards investments. So every time money is able to produce money for you passively, we say you have moved to the step of investments.
Okay.
Especially if it can be able to help you sort your financial, issues or goals that you want. So if I'm able to have savings and then they accumulate and grow into investment, anything can happen. Finances are risky. What do I mean? It can be a professional error, right?
Yep.
That's why even the fund managers or the companies that do investments on your behalf must have insurance covers in place.
Correct.
And those insurance covers are different. We have what we call the professional indemnity cover, which actually covers the professional errors.
Correct.
I could be able to see. So investments are run by people that would refer to as chartered financial analysts. But to simplify for a lay Ugandan like Sharon, I would say in our simple economics, we used to say it's built on assumptions. So I could be able to do a forecast and say, where are we at in terms of trends? Where is the inflation at? Okay. And where do we think we are going to go? You remember when you used to say ceteris paribus? All other factors held constant. Then you set the variables. But we've seen that sometimes it may not play out that way. So if, for instance, I advised a particular portfolio to put, let's say, 50% of their investment into shares,
Oh, wow. That would be quite risky. You
and
know?
they dip, because we do have products like balance fund that actually, you hear the name balanced, it's 50-50, traditional income and equities. So if you put the 50% in equities and it dips,
And no one wants to see a dip or a negative in their performance.
Yes.
They want to get high returns, but not willing to take the risks
Yes.
that are involved with stocks. And probably sometimes you could find that people are investing in stocks for 1 year and they need to get their money out, yet stocks are actually for people that are long term in nature. Okay.
so that could be all a different dynamic altogether in terms of professional advice and all that. However, what I was driving at is that we could be able to make a wrong decision. And usually when you make the wrong decision, we have categories of investors that are pulled together in different schemes. And maybe at that particular time, someone needs to exit. Do you have the money?
Correct.
Where's the money? The person needs to go. The contract says, as and when
They want to
I
leave.
want to leave.
Yeah.
So all those things, you can't come and tell clients, oh, bear with us. We made some wrong decisions here or something.
At times, they're not actually wrong decisions.
Yeah.
It's just the timing and
The
the
timing.
events happening. It would have been a good decision if the investors are willing to wait longer. It becomes a problem or a risk when investors are short term and invested in long term assets. And then when that liquidity is needed. It's going to affect all the people in the pool. So I feel like it's the education. When it comes to balanced funds, money markets or bond funds, most of Ugandans are not attracted to the balanced funds. But I feel like it's the education they lack. Please don't invest in a balanced fund with stocks if you're investing for 1 year. That's not for you. Go for money markets. Short term, you can liquidate anytime. There are no penalties. But here you're investing in companies that are listed, trading, meaning if they're not working well, they're going to have losses, just like how you run your business. So I feel like it's the education. I would love to do a balanced fund for my child later in university because she has another 6 years to go. So investing in a balanced fund actually gives you a greater return over the long term. Short term, the volatilities are there, the dips are there. And I keep telling my customers when they come to liquidate, I'm like, look here, this is the time to invest, not to take your money. Because if you're taking it when it has dipped, you're going to realize the loss because you're in the negative. Put in more money when the times are hard. When everybody's scared, take the leap of faith and invest at that time. And when it goes up, you can always exit. But that's very nice. So I'd love us to get into strategies an individual can try to employ to manage risk, especially managing risk here. I mean, while they're trying to maximize high returns, what are those things they can do to mitigate risk?
Okay. I really think that every other person, individual or company, whatever mode the person or the entity is, you need to always go back to review and adjust. Don't be so rigged.
I like
Don't
that.
set out your goals and say, I am set out to achieve this
I like that.
in this time period.
You need to be flexible. As times change, you need to change with the times.
And fast.
If you have a portfolio that has been lasting for the last 5 years, when COVID hits, it means you need to change. So people need to become more actively engaged and involved in how their money is invested. Because where you are at now, maybe if you're in your early 30s, it's totally different when you turn 50. So you're trying to say that for us to mitigate those risks, we need to keep evaluating our portfolios, looking at the times. Do we need more of liquidity? Do we need more fixed assets? So I like that.
Perfectly
I
well.
like that.
Also, you can dive into other variables like age.
Yes.
Because, I mean, you could have chosen this path when you still were young enough to explore certain risks. But as you advance, you have a family in place. Some things need to be adjusted. You can no longer run the risk as Sharon independently. Now you're Mrs. Someone.
I've made so many bad mistakes in investments because of my girls. Because you are torn between something that you would have done for yourself, and then you look up back at them and you're like, okay, if I made this investment decision, how does it affect them?
Them.
So it's not just about me as an
Yes,
individual.
yes.
You can take all the risks before you give birth. When the kids come into the equation,
They change.
everything is about which school are they going to?
What's my available
oh my
income?
goodness. So before
Can
we
I
have
afford?
kids, we need to plan, because
Yeah.
when they come into the picture, decisions are not made the same way.
Yes.
Wow, interesting.
Yes. And you would also have to look at your income. Also, because all these things, you need to look at them independently so that they then inform what's your new risk kind of tolerance levels, what's your new risk appetite, what's your profile like. Can you still draw the same pie chart, or do you need to draw, I like the clock. It moves forward, but with investments, it's okay to reach a place and say,
Pause.
can I reverse?
Go back.
Can I go back?
Yeah.
Can I draw back on the percentage that is in, equities? Can I now leave that percentage with the different insurance covers to the children and my retirement life? And then now, can I create and accumulate the current wealth we need to survive? Because also, you need to do this diversification. It's also not safe. And let me look into the camera and say, as your financial advisor, I don't believe in tying up your entire life for the future. You also need to live now. We need to live now. If Sharon needs a cup of tea to catch up, to generate that idea that is your next, $1 million idea, you need to have the time and the finances now to catch up with those social circles. So we actually need to review and adjust our portfolios. Either other strategies, really, if I borrow from finance and management, you could say risk avoidance.
How is that done?
For instance, people in businesses, I could sit, review my business, make a decision and say, this route is actually the bare, risks that you can actually see. And you say, I'm not taking this route. I'm going to take this route that gives me marginal, profits. However,
But stay
I will
afloat.
I'll have avoided a certain, risk that I cannot mitigate. Maybe I don't have the money to put in an insurance cover, but I can actually make the deliberate decision to say that's avoidance.
Correct.
Then I can also choose to say risk reduction. As you advance, risk reduction in finance, we look at it as you mitigate, you reduce the risk. You say, okay, now this is exposing me too much. I'm actually going to deliberately put a mechanism or a system in place to avoid. Point in case, if I look at businesses, if, for instance, you have regulatory issues coming up against either taxes, finances, all these things, you could get into heavy penalties.
If you don't
because
comply.
because of lack of compliance. However, there are systems under risk and compliance that can be incorporated in your business. You understand? You've invested in that, but they will flag you red. When you are going over and above what is the set limit, you're notified, So what you've done, you've mitigated the risk of actually what that could have been to your capital, because that penalty is gotten out of your balance sheet, your profits. So it means that now you can reduce, But also, to the topic we are covering, I would recommend risk transfer. I mean, if you can transfer the risk to a third party, why not?
Yes.
Did you know that actually even insurance companies reinsure?
Yes, I do.
And then the reinsurer also
Also
reinsures?
Yes.
So it's like from ICA, we have a reinsurer. Actually, the group is that strong, financial group. It's the First Chartered Securities. We still have the Kenya reinsurance. It's still East African reinsurance. Is still owned by the shareholders of ICA. So you realize that we also sit a risk there. Then they also have another person. Then they also have another.
Keep transferring
exactly
the risk,
to the international
yes.
biggest, insurer there is that can contain certain risks. So transfer the risk and say, I won't lose sleep as Dorah over these investments. I've done a good job to make these decisions and accumulate money and move in. However, I'm running a business and a building. Fire is in Uganda. You realize that sometimes the businesses go down before even police saves us.
Theft also.
Exactly.
Yeah.
Insure. Because these policies are there
Oh,
and
okay.
transfer the risk.
So I'd love to know or learn about any noteworthy innovations that are between insurance and investments. And maybe we can speak from the aspect of ICE Lion.
Yeah.
What are those products you have that give a bit of insurance or investments, or if they're separate? Yeah, just share with us some of the innovative products that you have.
I like the word innovative because now that targets, actually, I think is the only one. Yes, just to be sure. The only one stop shop center
Okay.
where you can actually blend.
You're going to pay for this advert, but let's go for it.
I'm sure my boss will be able to cover this. So where you can actually blend your investment. Actually, recently we've come up with the most exciting product.
What's that?
Let me see, have we launched? Let me tell them. Yes. These are the privileges of the podcast.
Nice.
So we looked at our portfolio under investments. I know that having known you, Sharon, from before the crisscrossing, you've been heavily rooted in investments.
Correct.
And I'm sure you can be able to say yes or no to what I'm going to say.
You wouldn't be here, Dorah.
So you realize that in investments we don't have a lot. The price is regulatory; it's set and fixed. When you look at the investments, we're all investing in the same environment.
Yeah, the diversification is still so tight. Yeah,
it's tight.
I agree.
I mean, we are more or less playing around the same thing.
Yeah.
One player will be at 12, another player will be at 11.9, another player will be at 11.8.
Correct.
So people have to just get into the dynamics of who do I prefer. Maybe other really factors they consider.
Value do I get?
I like the value. Because
Added
that's where I'm
value.
actually coming to. As I see a Lion Group,
Okay.
we've actually decided and said one of the risks that our good, well-behaved customers from profiling them have faced is the monster of illnesses, medical bills. This is not something anyone wakes up to.
And there's
say,
so
I want.
many, I don't know what the statistics are. I'll have to look up into them, but there are very few companies that are actually giving health insurance.
Yes.
Very few.
Exactly. And also after COVID, there was a lot of scaling back. Also, what you get is like a starting point, really. But it may not be able to cover things like cancer. It may not be able to cover major... I don't know. I've seen you from your experience.
Even age.
Yes.
75, no one wants to look at you.
Now, I will tell you in the market, IC is the only one with a gold plus product
Up
that
to what
covers
age?
Friend all the way, as long as you're
Oh my
alive.
goodness.
All the way,
my
as long as you
goodness.
are alive.
Nice.
However, we've looked at it. It's also risk and quite loss making because
Yeah.
of the behavior, tendencies of the customers. Slight headache, consultation in Nakasero. How about your doctor nearby here, Seguku or somewhere? You understand? You forget that actually it's going to deplete your premiums. And that's why people have the misconception, insurances are cheaters. You go and then it's suddenly you can't get these. However, we introduce things like maybe copay to try and say, if you are going to Nakasero to consult because of a headache, could you as well pull out a 20K and
So we
first
share.
pay? Hey, and then you are awakened to the call that, do I really have to go to Nakasero for my child having
So are we
flu?
trying to say Nakasero is very expensive?
Did I just say that? No.
Use
It
an
is the
example?
good. It is one
It's
of
the
the good
high
hospitals.
end.
Yes.
Okay.
So and people want to probably identify
Okay,
with
let's
such,
say it's the top number one.
in Uganda.
So everybody
probably.
runs there.
And I say this with a lot of disclaiming that I don't know about the health sector rankings, but yes, I hear it.
Yeah.
Even if something happened, I'll probably be thinking, Nakasero or something, or
Okay, platinum.
yeah.
Sometimes.
So yeah, but what I was saying is we looked at it. There's not so much we offer in investments in terms of apart from safeguarding your investments, giving you returns, and that's it. However, as I say, we've come up with what we call the second medical opinion.
Okay.
What is this? It's the monster that is eating into all our clients. They save. Someone has 1 billion. Someone has 2 billion. In just one illness like this, it's depleted.
All gone.
The travel, the maintenance when you travel, the bills.
You become bankrupt.
Exactly. So
Because
as
of illness.
an innovative product, we've actually been able to partner with MediGuide.
Okay.
On an international level, you can be able to read about AMREF. So what this is like, it brings doctors, specialists across the world together. I don't know, mention whichever illness it is. They will find you a specialist to review. Also, you've heard that in Uganda, we've had cases, okay, maybe across, wrong diagnosis.
Yes.
Someone is treating something else and it's something else.
They treat viral when it's bacterial.
Exactly.
Or bacterial when it's viral.
Exactly. But also in terms of, let's say, cancer, you know, we've also seen places where someone has enrolled for chemo, but maybe they're not yet at that stage. Maybe there are other interventions in the health, you know, sector, but they don't know because the doctor you're seeing has said so, you move. However, we've understood that for the comfort of the clients and the patient who is a client, they need a second medical opinion.
Oh, okay.
You're safer to actually take on this after you have understood 3 specialists have reviewed your case and agree that actually you should be taking this course of treatment. Or if not, there is this other one that won't, you know, deplete your finances. There's an alternative to it. The reason is we are not saying that the doctors here are not qualified. No, they actually work with your local doctor. That's the process starts with your local doctor. I've been diagnosed with this and he has recommended this. But as a client, you're saying, I have a benefit in ICA. I do investments with ICA. I can be able to actually have this consultation run at $90 or $35. $90 is like spouse and something, and maybe about 35. Please don't quote me. I'm just saying about 35 for an individual. $35, Sharon. That's a meal you sit at Java's and have, right?
Yeah.
But we are saying we are going to offer you your documents will actually be taken. Your blood samples, if it's blood sample, posted to wherever they have to be posted. You can actually choose. They give you a list of panels of doctors, reviewed doctors, because Mediguide is full of specialists across, really. Okay. So if it's a child, you'll have the Boston Children's Hospital, you'll have all these people, and choose. You could have read about a doctor that you think you're comfortable with, instinctively, really. And you say, I want this one to review my case. They'll post, and that doctor will work hand in hand with your local doctor.
When are you launching this product?
Well, our clients, the portfolios of our clients actually are open to it. It's
already active, I guess.
Yes,
So
yes.
if somebody signs up now and invests with ICA, you guys have also went ahead and included insurance as part of the added value.
Yes.
So I love that you're becoming very innovative. You're trying to ensure that indirectly people have these benefits.
Yes.
So you don't have to go for a wholesome insurance package, but you can do investment and insurance at the same time. So that's the innovation we're talking about.
So we are saying we are giving you this as a benefit, you know. Okay. That's the best we can do for our clients. Also, because of the muscle, you can be able to actually enjoy that. And we are not limiting it to the side of investment. We've actually said as ICA, as long as you're a client of ICA in any of the companies.
Wow.
Any of the companies.
With my 100K.
With your 100K.
Okay.
You'll pay your $35 and you'll actually have
for the
same,
entire year.
Yes.
So on top of the investment, there's a premium you pay.
Yes.
So it's a 2-in-1.
Yeah.
Wonderful, wonderful. So our last parting shots, I would love you to give us advice. Where do I start? Do I start with investment or insurance?
Interesting.
Okay. Dorah's opinion.
Yes.
Dorah's opinion.
Depending on the age. I would actually want to look into this camera and say, if you're young, Bambi, and you have some pocket money, start to save. And when you save, start to look for product like money market, you know. Start from there, expose yourself, save up, accumulate. Before you actually get out of university, you'll have built a substantial portfolio for yourself. Very beautiful. We never probably were exposed to this early enough.
So investment first.
Yes.
I love that.
Save, invest, you know.
Save, invest,
yes.
insure.
Exactly. And if you're young, take out a life policy.
Okay. Why
because
young?
I want us to draw the difference between the insurance and assurance. The life assurance and the insurance side. So probably when I'm young, university, I don't have a lot to insure, but I can actually take out a life policy because the younger, the cheaper the premiums.
Oh,
yes.
So you are in love with the young ones because the risks are less.
I'm encouraging them to start early. And then
insurance goes with age, guys. So you need to know this. They know when you're younger, your organs are working well. very rarely will you fall into trouble.
Exactly.
So I love the fact that it has an edge element. So when you start early, it's cheaper. Okay.
However, I want to actually also, as an industry, we've been challenged because it's not actually about age. We've actually noticed that there can be a 75-year-old, according to data, the data analysis. You actually find a 75-year-old who is not frequenting the hospital, and a 20-year-old or an 18-year-old who is actually having lots of complications, and their consumption, or what you now translate into a loss ratio, is really high. So things have changed.
Things have changed.
Yes.
Okay.
Kids are born with all lifestyle diseases, exposed to, I don't know what has changed, but it's now no longer, we can no longer actually just sit here and say age.
So it's a proper analysis that
Yes.
is done on you. And each person is different.
Yes.
And the premiums are different depending on your circumstances.
Yeah. However, for older people, incorporate annuities, it's an insurance product. You asked me about the innovation product, into your investment. So that by the time you retire, you still have continued income and medical at your disposal, which is one of the biggest beasts for investments. What else? If you're a traveler, I know you like traveling.
I love traveling, but since COVID, I've not been frequenting those flights.
Yes.
But now that I'm in self-employment, I don't have to ask for leave. I'm trying to ensure that my work can allow me to work from anywhere. So, Dorah, I'm not just making you feel bad. I want to be able to work from anywhere. So we're trying to automate so that I can travel and work from any part of the world.
Yeah.
Yes.
There.
So
travel
yes.
insurance.
Oh, travel insurance.
Don't move without this.
Okay.
Because if you are traveling with all these equipment, Sharon,
Yeah.
and yes, they could be insured, but now because they're out of the area becomes your risk.
Of the cover.
So you then include what we call the travel insurance.
The insurance works within a country or a district or what? What's that? Like ICA, which one do you cover? Is it within Uganda, East Africa?
It depends. It depends on the premiums. It depends on the type of cover you've taken out. We have clients that are covered. For instance, this is very common in motor insurance. It could be domestic. It could be COMESA. They call it COMESA, East Africa.
Okay.
Or, across. I mean, also medical. The people who are, within Uganda. Then it extends to Aga Khan. Depends. Expatriates, for them, they have also other arrangements, really. You find that they extend UN or wherever, whatever really destination. So it actually depends on the organization, because mainly our clientele is more like the schemes we collect together. Rarely do we see individuals taking out covers beyond Uganda.
So what this podcast is going to be doing is financial literacy. We want to use this platform, we want to use this channel to educate people about the opportunities out there. Probably schemes because they're already organized and they have human resource managers that are looking out for them. But I'm so sure there's so many Ugandans out there that don't know about these benefits, and they feel that they're for the rich. And because they're not well educated, when something happens, they feel like they can't transfer the risk as individuals. But I love it, and that's why we're here. We started this community to ensure that we educate our listeners. They make more informed decisions. In case you want to reach out to Dorah, inbox us. We'll be able to share her details with you. She works with ICEA Lion. And Legacy Hills Investment is actually a partner to ICEA Lion. So in case you want to get access to these products, please feel free to inbox us. Follow us on social media. We'll ensure that every guest that we bring on the show get to summarize and write a blog post about what they have talked about on the show. So even if you've missed it, you can still follow us on social media. That's Facebook, Twitter, TikTok, YouTube, and the different podcast channels where we are hosted. And the channel is Legacy Hills. And the program is the Wealth Hub podcast, hosted by Sharon Tumushabe. We would love to thank you so much for staying with us up to this far. And Dorah is going to come back in the near future. So we've just It's a starter. We'll have the main course.
Yeah.
We'll have the main course soon. So we'll see her more often on the show. And would love to thank you so much for coming all the way to our studios. Hope you love the environment.
They look beautiful.
Thank you.
Amazing.
Thank you,
Impressed.
Dorah. Thank you, Dorah. And to you all there, our listeners, our viewers, we love you so much. Click that subscription button and let's see you on the next episode.